day, Junior Tickies. I'm Mrs. Brimacombe. We're going to look at November Accounting Paper 2. This question is allocated 52 marks and 42 minutes. Again, make sure you stick to the time allocated per question. So question 3 consists out of budgeting and financial indicators. Take note how financial indicators is now incorporated into this question. You will be provided with a formula sheet, but you need to make sure that you study your financial indicators. A formula sheet doesn't tell you where does that financial indicator belong, and it doesn't even show you the name of the financial indicator. It doesn't show you how to comment. You need to make sure that you study that. Question 3.1. You are provided with information relating to Grayston Stores. The business is owned by Jerry Williams. The business uses a markup of 80% on cost. The budget period ends 31 December 2018. So when you start with this question, make sure that you read that instruction, because here they specifically told you what is the markup percentage, and you will need to know what the markup percentage is in budgets. Make sure that you go through the questions, all the information which is given, and have a look on your answer booklet. What have they provided you with? What is expected of you? Question 3.1.1, the debtors collection period. We need to complete the debtors collection period. Now you notice that there are figures given to you on the answer booklet. Do not change those figures. They already provided you with the credit sales. You were given the total sales, the actual and budgeted from September until December. They said the credit sales comprises of 40% of the total sales. You don't need to calculate the credit sales. It was given to you, and some of the figures have already been calculated based on how the average collection from debtors over the past 6 months is provided below, and the trend is expected to continue over the budget period. So they've already done some of the calculations. 25% is in the month of sale, which means the same month, 60% 1 month after the month of sale, 10% paid 2 months after the month of sale, and the balance is written off in the 3rd month after the month of sale. Very important. That balance which is written off is bad debts. It's a non-cash item. It will never ever appear in a debtors collection schedule in a cash budget. That will appear in your projected income statement. So if we start with this now, this is just my workings. What I do, I start with the first month which is given to us, September, and I'm going to do this for every single month until December. And then I'm going to start with September. 25% is collected in the same month, 60% will then be collected in October, and 10% will be collected in November. It means that the balance is written off in December. Now, if you look at September, they've already provided you with that figure, 14,400. So you're not going to spend time in calculating it. Do not put the bad debts into the debtors collection schedule. That will be completely wrong. Now we go on to the second month. In the second month, 25% in the same month, 60% in November, and 10% in December. So if we go to the debtors collection schedule now for October, we are going to collect 60% in November and 10% in December. So this down here is for me to help me getting the calculations correctly done. In November, 25% will be in the same month, and December 60%. So what is required here? The 25% for November. They already provided the 60% for December. So if we calculate November, 40,000, 320. In December, the same month, there's no calculation. They already provided the figure 46,800. Now, just something that I would want, what I would like to point out. If you go and you look at November, my credit sales was 161,280. If I times that by 60%, it gives me a different answer. And this is what I spoke about earlier. Do not go and calculate anything if the figures has already been given to you. Leave it as it is. But in the same sentence, I want to say that we would never disadvantage learners. If you did calculate it and you come across that there is a mistake on the answer booklet and you change that figure, we will mark accordingly. We will never disadvantage learners. Our last step to complete this is to total now and make sure that you include that 14,400. This must be included in the total. Otherwise, you're going to get it wrong. For December, the total collection from debtors. Completing now the cash budget. Cash sales, they provided it to you in November, which means we need to calculate December. If we look at the debtors collection that we've just completed, collection from debtors must go to receipts. Make sure that you use your answers which you've calculated in your debtors collection schedule. You cannot have different amounts in your debtors collection and in your cash budget. To work out our total cash sales for December, we need to take our total sales times 60% because 40% were cash. 40% were on credit. Another option, and this is not necessary, it's just for explanation purpose. If you were not given the total sales, but you were now provided with the credit sales, we could have done for December, we could have taken the total credit sales and then we say times 60 because the cash consists out of 60% and we divide it by 40. It provides you with exactly the same answer. This is just if they did not provide you with the total sales. As mentioned earlier, collection from debtors, make sure that you use your answers which you've calculated in the debtors collection schedule. So don't just leave it out. If you leave out the debtors collection schedule, then you won't have anything that you need to fill in there or can fill in your cash budget. Information E. The business replaces stock on a monthly basis to maintain a fixed level of 200,000. So this means that whatever we have sold, we are going to replace because we want to keep that stock level of 200,000. That's the amount of stock that we want to have in our business. So again, it means that whatever we have sold, we need to replace. And this is why they provided you with the markup percentage. Now they say to you, number F, the business buys 70% of its trading stock on credit. If 70% is bought on credit, it means 30% will be cash. Creditors are paid in the month following the month of purchase to obtain a 5% cash discount. So this is a little bit more difficult or challenging to calculate. If we look now at the total sales, why do I need the total sales? As I've mentioned earlier, we need to replace whatever we have sold. So we need the sales, we need the markup percentage because we need to calculate the cost of sales. Now the markup percentage was given to you right in the beginning, and that's why you need to read your information, all of it. Don't just start with the question. It says 80% is the markup percentage. I'm not going to look at September Because if we look at F, it says the business buys 70% of its trading stock on credit, and creditors are paid in the month following the month of the purchase. It means that if we purchase in September, we're only going to pay our supplier in October, and the budget period is from November to December. If we purchase in October, it means that we will pay our suppliers in November. If we purchase in November, we'll pay our supply in December. If I look at now what has been given to me, they provided to you the cash purchase of trading stock 78,000 in December. We need to find out November. They provided the November payment to creditors, which means we need to calculate December. This was not needed, but I'm going to explain it to you. In October now, our cost of sales, we need to take the sales times 100 divided by 180. 70% of that is purchased on credit. This means this will be paid in November, and if a 5% discount is given to us, it means that we're only going to pay 95% of that amount. The 5% discount is discount received, which is regarded as an income. That will appear in your projected income statement. So they provided this figure to us. Again, we didn't need to calculate. But what do we need to know is that the cost of sales is always calculated on your total sales, not only your cash sales or your credit sales. It must be your total sales. If we go now to November, my cost of sales, we have to take the sales times 100 divided by 180. 70% of that is on credit. 70%, which is on credit, 156,800, will be paid in December. But because of that 5% discount, we're only going to pay 95% of that total outstanding amount, 156,800. And this is the amount that will appear in your payment to your creditors. To find out now what was your cash sales, we're going to take the total cost of sales, which we've calculated, and we times it by 30%. Reminder, in November, purchases occurred cash and credit. That which was cash is the 30%, which will go into cash purchases of trading stock. 70% of that total will be paid in December, but we're going to receive a 5% discount. Make sure that you understand this. Again, I'm going to emphasize the following. When we look at the business replaces the stock on a monthly basis to maintain a fixed level of 200,000. Whatever we've sold, we need to replace. This means we need our cost of sales. For us to calculate our cost of sales, we need our total sales. We need the markup percentage. Because once we've got the cost of sales, we can calculate what percentage will be credit purchases and what percentage will be cash. Do not forget about that discount received. And it's the same with debtors. Debtors can be allowed discount. If debtors are allowed discount for early settlement, discount allowed is an expense to the business. It's a non-cash item. It will appear in your in your projected income statement. The amount that we actually collect from our debtors, that is the amount that will appear in the cash budget. The next one, a loan repayment of 24,000 is scheduled for 1 December 2018. The interest on loan is paid monthly. So the interest is paid monthly. This means it will need to go into your cash budget. But first we need to show a loan repayment of 24,000. That will happen in December. So this is an easy mark to get because we're going to say loan repayment, December 24,000. But what about the interest now? If you look at balances on the 31st of October 2018, loan, Terry Bank, 10% per annum, and our loan amount is 360,000. Now, interest on loan, they've already calculated the interest and shown it in November, 3,000. We need to find the interest on loan which is paid monthly for December. But now you need to keep in mind there's a loan repayment of 24,000 on the 1st of December, which means that our interest will be less that we need to pay in December. If you take 360,000 and you times 10% times 1 divided by 12, it equals 3,000. Again, you didn't need to calculate that. It's just to show you how to calculate interest. This was given to you. If you now take 360,000 minus 24,000, it equals 336,000. That must be times 10% and very important times 1 divided by 12. We tend to forget to take the interest that we calculate to say times 1 divided by 12. This is on a monthly basis. So the interest on loan will be 2,800. Now I'm going to show you some calculations which is very important to know. These are often asked and it can also be applicable to fixed deposit. If you want to calculate the loan amount for November, because they can also ask you to calculate the percentage and they provide you with the loan amount and they provide you with the interest. So if I want to calculate the loan amount and they provided you with the interest, we say 3,000 times 100 divided by 10 times 12. For December, we would have taken 2,800 times 100 divided by 10 times 12. So this is if you want to find out the loan and they provided you with the interest. Now let's say that they provided you with 3,000 and 2,800 with the interest on loan. And then they ask you question mark loan repayment. What was the total loan repayment? How can we solve this? We can use this method by calculating it for November and December and then the difference. Or we can say 200, which is 3,000 minus 2,800 equals 200 times 100 divided by 10 times 12. That equals 24,000 and that was your loan repayment. I'm showing you this. It wasn't part of the questions at all, but it's so important to understand how to calculate these. Interest on the fixed deposit is received quarterly. The interest for the last quarter for 2018 is due on 31 December 2018. So this means we're only going to show it in December. And this is money coming in from a fixed deposit, so it goes under your receipts. To find out what is the interest, we're going to take fixed deposit. The interest rate was 6.5% per annum and we've invested 80,000. 80,000 times 6.5% now every quarter means we have to then work out every 3 months 3 divided by 12. So the interest on the fixed deposit for December is 1,300. Salaries. The store manager earns 20,000 per month. However, from 1 December 2018, his salary will increase by 20%. He will also receive a bonus in December equivalent to his December salary. The business employs 10 sales assistants, each earning 6,000 per month. They will receive a salary increase of 4% effective from 1 December. They do not get any bonuses. Starting with the store manager, he earns 20,000 per month. So there's his salary. In November, it's 20,000. It's only for December that he's going to receive a bonus. So salary including bonus is applicable for December. To find out his bonus, we need to first find out, but what is his new salary? It's going to increase by 20%. This means 20,000 times 120 divided by 100. So he will be earning from December 24,000, and he will receive a bonus equivalent to his December salary. This means that we need to times that by 2 to find out his salary for December. If we look at the business employs 10 sales assistants, so for the assistants, we're going to say 60,000. They already provided that for us in November. 60,000 divided by 10 equals 6,000 per month. So we can just use that 60,000 and we say times 104 divided by 100. And that equals the monthly salary for all your assistants for December. So there are different ways in which we could have gotten to the same answer. You could have first worked out 6,000 times 104 divided by 100 and then times it by 10. That is 100% correct. We will get to the same answer. If you say times 4% and then you add it, also 100% correct. You will see later we will get to this type of calculations, but when you're practicing, make sure that you're able to work backwards as well. Example now, if they provided you with the December total sales assistant salaries and you needed to find November, and they said to you it increased with 4% effective from the 1st of December, to find November, you would have then said times 100 divided by 104, because December is after the increase. So don't say 100 minus 4 and then times it by 96%. That will be incorrect. Number J, the owner's monthly drawings are as follows. Goods, 5,000, so it takes trading stock. Another word for goods is trading stock. Cash, 50,000. The owner intends to increase his cash drawings to 50,000 in December as he is taking his family on a holiday. What is applicable to the cash budget is the amount of cash that he's taking from the business, which means that drawings for December, it's going to be 50,000. If you want to know the percentage more, you take the difference divided by 50,000 times 100. Just know how to work out percentages as well. It's not required. I'm just giving you the information in how to. If we look at number K, equipment costing 20,000 will be purchased for cash at the beginning of December. So equipment costing 20,000 is purchased. This is a cash item, so it goes in the cash budget. Because we've purchased this, it will go under payments, equipment. When will this happen? In December, 20,000. Number L, operating expenses are expected to increase monthly in line with the current inflation rate of 5.7%. This is now what I've spoke about earlier. The operating expenses was given to you in December. It was increased by 5.7%. So if you take 145,866 times 100 divided by 105.7, that equals the amount in November. Make sure that you understand how to get the previous month if there's an increase. Also know, how do I calculate if there's actually a decrease? If we're looking at a decrease, we would say the original amount is 100%. So if there's a decrease, we will subtract. For example, let's say there's a 5% decrease in rent. We would say 100 minus 5, which means it will then be equal to 95%. part of the building are rented out on a monthly rental of $5,000. There's no changes to the monthly rental. So in December, rent income $5,000. We've now looked at all the transactions, all the adjustments that we needed to make. So our next step is to find out our total receipts. Ensure that you add everything, even those figures which are in bold. Total receipts, then we're going to add our total payments. So we start from cash purchases of trading stock, and everything must be added up to operating expenses or including operating expenses. Total receipts minus total payments equals a cash surplus or deficit. Or another word, shortfall. If it's a shortfall, it means that in this case you can clearly see it means our payments exceed our receipts. This means that there is a shortfall, a deficit. The balance at the beginning of the month were given to you. To calculate the balance at the end of the month, we take minus the shortfall plus the balance in the beginning equals the balance at the end. So because we had a favorable balance in the beginning, our end balance is still favorable. Closing balance at the end of the previous month or for November is my opening balance the following month. And now we need to follow the same steps. We first calculate our total receipts, then our total payments. Total receipts minus total payments equals cash surplus or shortfall. Our total payments exceeds our total receipts. That's why it must be in brackets. If you don't show the brackets correctly here, it's going to be incorrectly marked. It's going to be wrong. Now we can calculate our balance at the end. Minus plus equals. Now we have an unfavorable balance at the end. Now, just make sure when you're done now with this that you can do calculations. If, for example, that was a balancing figure or a missing figure, and you were given the shortfall and you are given the month-end balance, how do I calculate the balance in the beginning of the month? Question 3.1.3. Refer to transaction J and explain why the employees should not be satisfied with the increase of 4% in their salaries. Now, please take note of the following. That was clearly a mistake on the answer booklet or question paper, because if you look at the information J, this links up to the owner's monthly drawings. It's nothing to do with employee salaries and the increase of 4%. So if you look at what was the correct information, it should have referred to information I. So just be aware that it shouldn't happen, but there can be mistakes. And then just have a look at what is relevant in the information. It's clear that it should have been I because I talk about the salaries and the 4% increases that the employees received. Now refer to that transaction. Why the employee should not be satisfied with the increase. If we look at the increases given to employees was below the inflation rate. There's even a hint here if you look at information L where it says, in line with the current inflation rate of 5.7%. And what happened here? The employees received an increase of 4%. So that's even below the rate that they've provided with the information with the other operating expenses. Now, if we compare this to the manager, he got a 20% increase. That's 16% more than what they are receiving. Clearly, that's why they are upset. Why if they've only received 4%, which is below the inflation rate, yet the store manager received a 20% increase. And another thing, he received a bonus equivalent to his salary. They didn't even receive any bonuses. Let's just pretend now that the the store manager didn't get a salary increase for 20%, but the owner decided to only increase it by 4%. Then you can argue the following as well, or you can ask the following question: why is the owner justified in his decision in only providing them with a 4% increase? And then we can go back and we can look at the cash budget. What happened with the cash budget? We ended up with a favorable bank balance and an unfavorable bank balance. So just be aware in how the questions can be asked differently, and you will need to interpret it and use the information which is provided to you. Quote figures. The next part of the question, 3.2, is financial indicators. So it's a separate question from 3.1. Do not use the wrong information in your calculations. It's a separate question. It says Nkosi Traders. The following information was extracted from the books of Nkosi Traders for the year ended 28 February 2019. Required: calculate the following indicators for the year ended 20 February 2019. Again, just take note of the following. It says year ended 20 February 2019. There it's talking about 28 February. It's talking about 28 February. So on the question paper, that was most likely just a typo. It is still for the end of the accounting period, which is in 2019. So you have to calculate the average creditors payment period, the stock holding period, and then compare the financial indicators for February 2018 and 2019 and respond to the following questions. Starting with question 3.2.1, calculate the financial indicators for the year ended 28 February 2019. And you see on the answer booklet, it does say 28 February 2019. The average creditors payment period and the stock holding period. So to start with the average creditors payment period, average means it's the beginning plus end divided by 2. All goods are purchased on credit from Nkosi Traders. Creditors, it's the beginning 47,000, beginning 43,000 plus the end 47,000 divided by your cost of sales, which is 235,000. All goods purchased are on credit. Very important, this must be in days, so we times it by 365. So 45,000 divided by 235,000 equals 69.9 days. I'm going to show you alternatives. Again, you don't need to know this. It's just be aware that there's different ways in which we can get to the answer. If we take the cost of sales and we divide it by 365 days, this is your cost of sales per day. Now we just take the average creditors divided by the cost of sales per day. It gives you exactly the same answer. This is just an alternative. It does not appear on your formula sheet. The stock holding period is your average stock, which means beginning plus end divided by 2 divided by your cost of sales times 365. Stock holding period means how long do we keep our stock, or how much stock do we have. 35,000 divided by 235,000 means 54,4 days. Now again, I'm going to show you alternatives, other ways in which you could have gotten to the answer. Because they provided you with the stock turnover rate in the information, you could have said 365 days divided by 6.7 times. Now you will get a slightly different answer. This is just because of the decimal places, the rounding off. Or if you take the cost of sales per day and you use your average stock divided by the cost of sales per day, that gives you exactly the same answer. Now for the commenting, 3.2.2. Compare the financial indicators for 2018 and 2019, February, and respond to the following questions. Comment on the stock turnover rate and the stock holding period. Quote figures. This means the stock turnover rate that was given to you. So make sure that you quote those figures which are given to you. In 2018, it was 8 times per year, and in 2019, it was 6.7 times. If that number goes lower, it's not a good thing. It means it's taking us longer to sell. Now, if we look at the stock holding period, it was 45.62 days, and it increased to 54.4 days. So it's taking us longer to sell our stock. Now, when you're commenting, make sure that you quote the financial indicator, you indicate the trend, and then you provide a comment. The stock turnover rate dropped from 8 times to 6.7 times, or by 1.3 times in 2019. The stock holding period increased from 45.6 days to 54.4 days in 2019. Now explain why Nkosi traders should be concerned about the two indicators and provide 1 point of advice to Nkosi traders. So why should he be concerned? The business could be keeping too much stock on hand or slow moving of stock. It's clear it's taking longer to sell. Cash that could be used to generate income is now tied up in that stock. So advise, reduce the quantity of stock purchased or improve the promotion or advertising strategies. There are so many ways in which budgets can be asked. Make sure that you practice past exam papers on this topic, on all the topics actually. The more you practice it, the better you will become at it. Next, we're going to do question 4. Thank you very much. Have a wonderful day.